Hey guys, this is the 4/20/2026 recap for today, levels and trade plan correlation. So earlier today on our trading view page, we made mention and showed the recap or showed a picture of today in response to a comment earlier and request for the levels not correlating to the plan, or rather to the zones here on the screen. So the levels inside the plan not correlating to the actual zones and levels on screen. So we thought we'd do a video to show you that they in fact do correlate, why we position our trade plan the way we do, give context to it, and train everyone on it, right? And so this was how the trade plan worked out today. I mean, it currently is 5:44, right? Market is closed up. And so you can see the zones, all this stuff is posted before the market opens, right? You can see it there, you can see the levels, etc. Now we want to be very, very clear and transparent. We are at all-time highs. How do you project levels at all-time high? That's virtually impossible for anyone to do. I mean, they may stretch a fib. They may try to create some other way, right? Maybe use some EMAs, SMAs, maybe whatever. But the reality is we do have a way, and it requires all 30 KPIs. And so what we're going to show you is the correlation from today, and we're going to train on our trade plan for today. So very, very first, high level, right? This is how my screen looks every day when I'm trading, all right? Irrespective of what trade I'm going to take, I've got 4 trades I can take, right? I can go SPX, which is here, ES, which is here, QQQ, which is here, and NQ down here. I can take any one of those trades, right? Why is it important to look at the market holistically? It's important because the market moves as a unit, right? There are individual sectors and individual stocks that have higher weighting. However, you need to be able to give context and make sense to why the market does what it does, or why it's moving the way it's moving at any given time. Here's an example, right? The market over here, right? Again, everything that we do is based primarily first on holds and structures of the 15-minute. We are not, we're going to say this again, we could care less about the 1 minute. In fact, some of the volume indicators that we are preparing to release have no bearing on the 1 minute, right? You can still get data, but you cannot get support on the 1 minute. If you want to trade them on the 1 minute, that's fine, right? If you go down to the 2 minute, no, we can't train you on that. That's your own personal, right? If you go down to the 3 and the 5, now we get a little bit better, right? Now we get a little bit more data. But what we like to do is we like to present and have our data, make our decisions primarily on higher time frames. 15-minute, we check the higher, and then we enter on the lower. But the volume structure, the volume of the candles is here. So we're gonna help you out. So for example, you can clearly see this is a beautiful example. You can clearly see down here to your right on NASDAQ, you can see this is a variance zone. This says we're going to trap, stall, or reverse. When will we break out of this variance zone? We don't know. How aggressively will we break out of this variance zone? Just by looking at the chart. We don't know. What we do know is there are orders. There is a high probability of some action right here to reverse, trap, or stall, right? And obviously that's where most of the action happens. You can see it right here, right? Let's just magnify that, right? You can see it happen here. Now we come past the variance zone. Do we always come past the variance zone? No, but you will see the bulk of the negotiations, the bulk of the trader flow and switching hands, we could say, right? Pull and pull, tug of war happens in the zone. And oftentimes we will break or test the high and break, or test the low and break, right? So we want to be very transparent. Where exactly will we reverse? We do not know. If anyone tells you they know exactly where they let us know, because we'd love to meet them. No one knows exactly. What we can tell you is a zone, and we can get pretty close within a few points. That is as close to perfect as it's going to get for us. Can't speak for anyone else, all right? So if you want if from our perspective, we're going to say this, from our perspective, if you want near perfect, near close to, then this is for you. If you want perfection, we haven't gotten that yet. All right, we haven't attained that yet. So that's number one. So number one, when you get our indicator, please, folks, this indicator is not for someone that is looking for a trade signal to pop up at the exact level every single time with prediction. It doesn't work that way. We can forecast. We can have predictive logic, which is what we have, right? And we could go back to all kinds of days. Let me look at this. We said buyers. Are buyers there? Yes. Buyers there? Yes. Right? I mean, do we come into the zone here and peak out but break back in? We're on the 15-minute. That's what we built this for. It's a reliable, it's higher, right? Here, we have a variant zone to the downside. We had such strong pressure. We just broke it. We just broke it and kept rolling. Then we see a top-down pressure at a magnet level. And then ultimately, we go to the next one, right? This is one of those days where all bets are off. We're running. We're above the LIS. And we're running. So we're going to go into a couple things. Let's go to it now. All right. So number one. All right. So when you see the magnet levels here on your screen, you see everything on your screen, this is a part of our trade plan. But our trade plan will give you intermediary distance targets. It will say other price points where the stock, once it's breaking towards our zones, where we expect to see some type of a shift, or rather where we expect to see a stop or a pause or some type of a checkpoint, we could say, right? And so we use those for risk management in addition to our levels. So let's go to let's go to a trade plan here. We're going to go to SPX trade plan because this is what we want to talk about. This is our flagship, right? All of them are. We're going to do SPX today. So SPX, right? Before the market open, here's our levels. Here is the control, we could say, level for the day, LIS 1, LIS 2, variance zone, right? The rules are, we're going to state it again. If you are an inexperienced trader, what is an inexperienced trader? Only you really know that, but we'll tell you now. 3 to 5 years, if you've been trading under 3, if you've been trading not consistently under 5, you are inexperienced. Now, you might not want to admit it. We get it. Or you may have a specific stock where you're good at. That's great. But what we're saying is, as far as the entire market, you know where you are. You may be experienced at 3 years because you may have just been, trial by fire. Maybe you've lost a lot, gained it back. You've gotten a lot of experience, but that's not the norm. So what we're saying normally is folks that have been trading underneath that time, this is what we suggest. You can do what you like. This indicator, our suite of indicators, works with any system. These are just suggestions. If you are an inexperienced trader, when you are in a variant zone, do not trade it. It is an area where the market is likely, there's a high probability to trap, stall, or reverse. Once you get the feel of things, once you get a little bit of experience and you want to take a trade, only take the extremes. Extreme here or extreme here, right? Because this is a purple variant zone, it suggests we're going to go down. You would get your trade here. You would not fall for the false breakout here. You would wait for the hold. You saw the collapse back into it. You're taking it, and you're getting a multi-candle 1, 2, 3, 4, 5 bar break. And would you look at that? Where do we turn? Again, this is today, right at the VZ. Okay, but how does that all play in comparison to our trade plan? Let's bring up the trade plan for today. Now, we won't make this long. We'll go over one of them. The trade plan consists of 5 parts, a special message. Let's read that today. The market is in positive hedging territory. There's a gap above with volume suggesting we will continue to move. There is an extreme edge today. If the volume continues to shift, look for the VIX downward move back to the 17s. We have in our masterclass, we have an entire training on this stuff. So when we put our notes out here, it is assumed that the reader understands the major components of the market. That's what we want to say, okay? Then the big top is oil. Everyone knows that. War, oil prices up, is going to be pushing on bonds and the VIX, right? 20 may get tapped, etc. Then we give you, a little special note. Hey, this is how you understand what we're saying. This is how you understand our system. This is how you understand, all those things. And then, hey, look, we got a master class. It's free, first 4 modules, blah, blah, blah. But we also state right there, look at that. We are not your gurus. We are this, quite frankly, guys, we cannot hold people's hand. It just gets too crazy. What we can do is provide the analytics and context around it. We can even show you our system. But everyone has a little edge that they like to exploit. Then, and we're going to be updating this soon, how to use the indicator is right down here. Quick start guide, what these mean. Okay, so now you're going to get a trade plan. There's multiple parts to it. The first part is where we stand. This is what we're saying. And there are numbers on SPX. There are numbers on Q. Because ES and SPX work together, there are no numbers here except for our playbook, right? You don't need us to restate the conversion for you. You're going to have to do your logic, right? Now with Qs, there's not necessarily a conversion here for Q to NQ, but the zones are there and the playbook is there. Now, what you will find is the playbook numbers, these are not the magnet levels, right? This is saying tape. If the tape, right? This is helping you with, hey, if the tape starts to build and we start to move towards zone 1 and it clears zone 3, this is what we're going to be looking to take out. Why? Because we have identified orders on the tape. We're helping you out here, right? It's crazy, crazy help there, right? We are not saying in every case these are magnets, and we're saying, hey, these are risk management and tape where orders are going to move. The magnets are levels where we think the market intermediary has distance and there's going to balance. So there's orders here as well. But if we plotted as the tape is moving that morning, if we plotted all those levels on here, which are secondary to the magnets and the magnets in its own, this would be unreadable. It's the whole premise why some traders lose and other traders win, because all of those levels do not matter at that moment in time. But if the sentiment shifts, they will matter. And we believe you should have the information. So now we're on SPX. All right, we're on the 15-minute here. So now we go up here and we start reading it. Where we stand, everything that you see here is an if-then, right? It is based on the movement of the market. Here's why. When we release our data, the data is released by 9:15. Between 9:15 and 9:30, there can be volume and liquidity shifts, right? You could open anywhere, right? Within 15 minutes, which means that we either have to make a prediction, which we don't do, or we just have to let you know where we open in relation to the time that we're reporting. So we could say we open 6 points above, but that would be a lie. Because in 15 minutes, we could drop 15 points. And then, you know what? You'd be mad. You'd say, oh, the data doesn't work. So what we do is we give you a round statement, right? We're going to tell you, we open close to. Why is that important? Why is it close to? Because if you've taken our training, then you know that a mean reversion when we're close to the LAS is going to happen. It is up to you to deduce the amount of points to say, okay, we're 6 points away, we got a probability of reverting to the LAS. Remember, this is where Wall Street has to balance. So we just told you, hey, look, we're opening close to the LAS. LAS 1, 7100. If you've taken the training, then you know we're likely to revert to that, okay? Right? Then it says, okay, zone 1 at 7106 to 7116. So let's look for zone 1 here. 7106, bada bing. 7116. So this is where we are, right there, right? So we're spot on with that, okay? Then it's saying, is the first ceiling above LIS 1? Here's LIS 1. This is the first ceiling. That is factually true. LIS 2, here's a number, 7130, stacks between 1 and 3, right? 1, 2, 3, right? And you get the point there, okay? This is pretty straightforward. Then we give you some context on where zone 4 is, what it is in relation to VIX. At times, we include some GEX information in there because it impacts the tape. It does matter. And then other catalysts, right? There are so many traders with thousands of traders needing data and buying into our system and what we, right? We know it won't work for everyone, but we have to provide the data that matters, and some of it matters more for others. So for example, every month, we do get feedback from different sources. And some will say, hey, I want to see more alerts in this area. Some will say, I want to see different colors for the background. And we queue all of that up to make adjustments to the script. Yes, we do, right? Depending on how much requests we get. Others will say, I like the playbook levels. We took the playbook levels out once. Many people said, no, keep the playbook levels there. So we're always going to adjust, guys, but we're only going to adjust based on the feedback. So we value your feedback, but we thought it would be appropriate to show you, number one, this isn't a, hey, everything works fine video. This is a, yes, it works, but let's put context to it. So now let's get down. So we've already talked about the if-then. If the tape reclaims zone 1, if the tape reclaims zone 1, boom, we reclaim it. Now we're starting to move here, right? So 71, 7106, et cetera, all right? And then these are the areas where we're seeing the flows. Now, we could remove this if we get feedback and say, hey, it's not relevant. We don't need that, right? You've given it to us already enough. You give it to us down here. We don't need that. We can absolutely remove that. You just let us know. We get enough feedback on that. We're going to take it out. No problem, all right? So if zone 2 fails, this is where we're going, 7707, et cetera, right? So the idea is on some, I think the confusion is, and it's covered in some of our training here, what we're going to start to do, well, what we're doing here is we want to help you to understand where zone 1, 2 is per stock. I think that's important for everyone to understand that. We may even put some labels here, right? Because for some, 1 is here. 1, 2, 3, 4. Others, 1, 2, 3, 4, right? So depending on what you're trading, you have to look at the context, and it might take you 2 minutes, 5 minutes, and then you got it. Right? You got it. It doesn't change. That's whatever the layout is, the layout, right? So we're thinking about, that's in the queue. We're thinking about putting some more context on screen. We don't want to overload the script. So we could do that. Okay? All right. So after that, we give you market structure. We get a little more deep dive, talk about how it's layered. And you can see some numerical values are referenced. And then in EES, as we get down, some aren't, right? So what we don't want to do is overload the reader. That's what we're trying to get away from, right? And so we're going to continue to work to find a happy medium, right? So what would be the best thing to do? We're going to say this is not, you don't have to do any work. This is not, I can just show up and blindly, no. You're going to have to do your prep work, whether it takes you 30 minutes, 5 minutes, an hour, 10 minutes, we don't know. It's different from everyone. But we are confident that once you got it, right? And we'll continue to make adjustments as well. But we thought we'd put together, we're already over time with this video, you can read the trade plan in relation to each ticker, right? You can go down to QQQ. Once we get to the Qs, right, we've got a playbook here, and we just simply reference the zones, right? And the reason we do that is because if we tell you the LIS will open at this number and it doesn't open at that number because of a late day break or a late session break before the market opens, then our trade plan is off and it's unreliable. So we cannot do that unless we start to release data right at 9:30, and that doesn't work for anyone, right? Well, it could work, but it doesn't, but that's not what we've committed to, all right? So we're going to say that full transparency. We realize that won't work for everyone. Some of you want us to tell you exactly where we don't know. We can't do it. This isn't for you. But if you're open to making your own decisions, if you're open to getting the framework and looking at the levels and just simply doing some of your own math and conversion or doing some of your own layout, that's called trading, and you want to do that and it takes you 5, 10, 15, 20 minutes in the morning, then this is 100% for you because the levels are on point. So if you had to choose, here's what we suggest. Get comfortable with the trade plan. If you don't like all the context in the trade plan, you can have your own trade plan and use the levels as your map and confluence. That's why it's called the market map, because irrespective of what this trade plan says, this is the framework that we're working in. And the trade plan is our layout, how we're seeing it. We could put mountains of data in here, but that doesn't do any good if the viewer, or rather the subscriber, if you guys don't understand it, right? So let's go ahead. We got about 2 minutes left. Let's go ahead and button up a few things, misunderstandings, or a few things that you may not know. All right. Will we always reverse exactly at the zone? No. all right? Volume tests highs, volume tests lows. Typically, and if you can go back and look at our statistics, typically we do. In the zone, we're there, right? On the 15-minute, this is a 15-minute, boom, 15-minute chart, okay? So if you go to higher time frame, I mean, it's going to look even cleaner, right? It's going to be so look at that, at the level. There's the buy up, even cleaner. We're not talking about lower time frames, guys, okay? So if you're scalping, this is for you. But if you're scalping and you're not looking at your setups and structure on a higher time frame, this is not for you. You're actually gambling. It's a very bad way to trade. Okay, so we've already dispelled that, right? All right, so are the levels, these magnet levels, are they less important than the LIS and the zones? Yes. What are the magnet levels? Number one, they are intermediary targets. We have identified volume and some volume shifts there. And they are risk management levels, meaning as we begin to break, you learn how to move your stop in relation to these levels because they do represent the presence of buyers and sellers. As we clear them, then you will get comfortable with moving your stop. We talk about that in the risk management portion of our masterclass. So you may be looking at your screen and you may be seeing something different now. You're looking at the bottom and you're seeing the VPACs. This is our volume, pressure, acceleration index, or VPACs for short. It's our volume by time indicator. There are signals in this indicator. I'm going to show you one cool one right here. Let's see, where can we go? We can go to, let's go to the futures, because the VPACs only works when there's volumes there, right? So you can have real volume or you can have enough synthetic volume, but if you have something like SPX, which is an index, we want to trade SPX based on the volume of SPY and ES. So in this case, because we cover ES, the VPACs will work on any stock with relevant volume. We want to say that now. And that's what you get. But you notice here, I want to be very, this is so cool here. I want to be very descriptive here for you. So this is the other day, right? Friday, pre-market session, right? You see how right at 5:30, you get a diamond. This is an absorption diamond. It is a script code that we have in here. It works along with our delta EMA, right? We're looking at some delta and some smoothing and what have you, right? Our exhaustion bands are on here. We got a whole thing about this. And we'll talk about how to get access to that in the future. Should be, we got it already going for some team members, but we're going to release to you guys. But anyway, this fires when there is an absorption imbalance, which tells us we're getting ready to spring or move out of that area. When are we going to move out? We do not know. How aggressive are we going to move out? We do not know. What's the probability of us moving out? Extremely high, right? Nearly every time we're going to, so if I were to go back, see they don't fire every single second. See, they were on 15, they don't fire every single second. See that? But when they fire, a move is coming. So let's just look at a couple others then. We'll go back, all right? We'll test this, what I'm saying here, all right? We'll test it, all right? Now, we're just getting you comfortable with this, right? So you can understand, all right? Here we are there. Okay, perfect. There is an absorption here, right? That move is done. See it? Failure coming, right? So this is telling us when the institutions, if you will, in so many ways, they're either pulling their rug or they're loading up. And we train on that. See that? Collapse. Boom. Before the move, right? Look at that. It's a signal before the move, right? This is the first time we've released our system with signaling here. See that? Something's getting ready to happen here. So as we go into the open shakeout, collapse, right? See that? Right there. See that? Right there. And we could go on and on. How do you read those moves? When do you trade them? When do we trade them? All that's in the training. But we would just want to share that with you. So that's what you're looking at down here. You'll be seeing our volume, and then you'll see our volume profile and some others. All of them have some nice edges and nice little proprietary signals or tools inside of them. It will do you no good unless you understand our system. Or just in a general sense, understand volume, and what to expect. So, and all of that is in the training, and we'll do a couple of those here on YouTube. But we thought we'd just recap that. I mean, this video's already gone too long, all right? We thought we'd recap that and help you out to understand what you're looking at, how the trade plan is written up. We can do more. If you ask us for more, we'll do more, right? What to look for, and we're looking for your feedback. Tell us what's relevant to you. Tell us what's not relevant to you. The more feedback we'll get, right? We have made changes over time, but if we put every piece of data in here, this will be 50 pages long every morning. You just don't have time to distill all that. So we feel if you have to look at this thing for 15 minutes, we feel like that is unheard of and a huge win, right? Huge win to be prepared for the market. So this has been your we're talking 4/20/2026. This is our levels and our trade plan correlation, just filling in a couple gaps. And as always, happy trading.